Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome again to another edition of Java with Jared. Hope you guys are doing fantastic. Well, looks like the week is ending now with rates better than where they ended the end of last week. So that's a good thing, but it didn't happen until right now. Right now, this rally is going on, and I'll tell you why here in a second. But it wasn't a really big week in terms of economic data. We just saw a couple of pieces of information released in terms of data side, but it was a really big week in trying to figure out what the heck is going to happen here. The markets are trying to figure out what's going to happen with QE3 and how it will affect the economy, who the next Fed chair is. So my title is that the markets are certainly uncertain. No one knows really what's going on, and it's causing a whole lot of volatility, which is resulting actually in a little bit of a rally here. And so interest rates are getting a little bit better, and we'll see if it holds. But for the majority of the week, actually, rates were hovering amongst the worst levels that we've seen in over 2 years. Now, July 5th, we hit these levels. Then the market got a little bit better. But we were back around the lowest or the highest interest rates, lowest levels in terms of the actual yield, or actual price of bonds or mortgage-backed securities, which causes the yields to go up. But we were around the highest levels in interest rates most of this week. And it's because of concern over what's going to be happening with QE3. Now, from an economic data perspective, we did see some numbers released. First number was existing home sales. That was stronger than expected, which we kind of see happening every day. Expectations were for about 5.1 million units being sold on an annualized basis. Last month it was 5.06. But it was in the data this week that was released showed about 5.39 million units. So it was stronger than expected. So that's pretty good. Well, today we saw new home sales come in, and that was a big shocker. It was way down. It was down 13.4%. Expectations were for about 495 million or thousand units. 495,000 units. Prior was 455,000 units, and the actual number came in at 394,000 units. So way lower than expected. And so that is causing a rally because it's like, okay, and you can hear it in the media today. CNN is all over it, or CNBC is saying, is this the death of housing? Well, I think this is just a blip on the radar screen, but it does show that these higher interest rates are having somewhat of an effect, at least on the new home sales side. So that is causing a rally. Also, what is causing a rally is that there were some comments by Federal Open Market Committee members stating that QE3 tapering, we got to be careful with it. We can't really stall this economy, and we need to see a lot of more economic data come in to see really what's going to be the best course of action and how much we should taper. Everybody agrees that this needs to happen, or at least the FOMC agree that we have to begin tapering at some point. But when do we do it? And when is the economy going to be able to hold it? So both those things are causing a really big rally today. We'll see if it holds, but at least that's a good thing. Now, again, I talked about the markets are certainly uncertain. This volatility is because of all this uncertainty. The markets hate uncertainty. They're not only uncertain over what's going to happen with QE3, but also who the next Fed chair is going to be. It was perceived a few months back that Bernanke's going to be out the door, and it was perceived that Janet Yellen, who is a FOMC member for quite some time and very well respected, was going to be the lead pipe lock, that she was going to be the chairman or chairperson almost no matter what. Well, that's been changing, and from a political perspective, it's a guy by the name of Larry Summers. Actually, he's now the front runner because that's who Obama has been kind of talking about, and President Obama does owe some favors and might have him be the next Fed chair. Now, he's not been involved in the FOMC. He's more of a loose cannon, says some things off the cuff. It's like his way or the highway. And that's not really great qualities to have when it comes to a Fed chairman. You don't like a lot of shocking news because that really roils the market. So the market really hopes that both stocks and bonds and mortgage-backed securities, hopes that it's Janet Yellen, but Larry Summers could be the guy. And if that happens, that could cause some real worries in the financial markets and cause some shockwaves to go through that. So it's all that uncertainty that's adding to the volatility. Next week, we're going to see a whole lot of economic data that comes out. And the week after that, we're going to see the employment report come out. And then, not too long, next FOMC meeting, which is September 18th, and people are looking at that day as being one where we maybe know more about what tapering might look like. So we'll keep you informed. There's still going to be a lot of volatility, still a lot of uncertainty, so tell your clients to lock. Hope you guys are doing fantastic. Thanks for joining me with Java with Jared. If you ever guys have any questions, please give us a call. If you're working this weekend, so are we, so let us know. We're happy to help. Have a wonderful weekend and a great week next week, and we'll see you next week. Thanks a lot. Bye-bye.